Hello guys, welcome back to this channel. This is Godly Forex Academy, and in today's video we'll be talking about candle range theory. Right, we're talking about candle range theory. So quickly we'll be using Euro USD starting from daily time frame. This is how you get to know your daily bias, how to scalp and make good profits during the trading day. So what you want to do in this simple strategy, this is very simple, and trust me, I always do strategies that are backed up by institutional traders, right? So quickly let's dive into the video. What you want to do first, every single day when you come on chat and you are ready to take up this particular strategy, you have to look back the previous day. Remember, this is the daily time frame, right? So you want to look at what happened in the previous day. So this previous candle, this is a Thursday candle. So what you want to do is you want to mark the high and the low of that candle, right? You want to mark the high and the low of the candle, but you have to make sure that it is well precise. No room for errors, right? It has to be exactly at the wick. So this is, you want to mark the high and the low. That is the wick at the top and the wick at the bottom. Simple process. Just look at the previous candle, and it's going to give the buyers for the next day trading buyers. So after doing this, we want to mark that exact candle that gave us the high and the low. You want to mark that candle, and how will you do that? You can use the vertical line just to highlight the particular candle you used for the high and the low strategy, right? Now, after doing this is the daily time frame. You can scale that to 1 hour time frame. Trust me, you're not going to take your trade on the 1 hour time frame, right? So you just want to ensure that your lines are perfect, right? You want to ensure your lines are perfect. Now, beautiful. This is. But before we go straight into this strategy, let's go back to the daily time frame. One more thing. Now, you want to trade in today's range, right? So you can easily mark this day range. So that is the opening of this new day. So you just have to mark that out so you can get to understand it when you get to a lower time frame, not to mix things up, right? So good. This is the entire candle. If you count from here to here, we're gonna have 24 candles. So this is the entire range of the previous day, right? This is the entire range of Thursday, right? Of Thursday. Now, from this aspect here, we have Friday's range. So how do you actually trade this strategy? I'm going to explain to you in few seconds from now. Now, what are you looking for in your 1 hour time frame? Remember, you've already marked the high and the low of the previous day. Now, on your 1 hour time frame, you want to look at the entire direction of the trade, right? You want to look at the entire direction of the trade. Where is this trend heading to? Remember, whatever strategy that you're using, ensure you also back it up with solid support and resistance area, right? Solid support and resistance area, but we'll not get into that in this video. I want to make it as fast as possible, guys. So on the 1 hour time frame, you want to see the trend of the market. And how will you get to know the trend of the market? You go down to your ray tool or your trend line, but for me, I prefer using the ray line, right? The horizontal ray line. You use this way, mark the high, right? This is it. So it means we're having a bearish trend happening right now, right? So this is all what you want to do on your 1 hour time frame. Is as simple as this, guys. Now you're not taking your trade on your 1 hour time frame. You want to take your trade on the 5 minute time frame. So what are your conferences? How do you take these trades, and how do you manage your risk? You know me, I always preach about risk management. Capital preservation is your number one goal as a trader, right? So you can see here, price has rejected off this trend line, right, and bounced towards the downside. Now we're expecting price to do what? To bounce all the way back up. Now let's just do this. Let's clone this trend line so we can have it as a channel. Watch this, guys. So you can have it as a channel. Can you see? This is absolutely beautiful. Absolutely beautiful. Can you see we have the up channel and the down channel? Now we can see price started off this way. This is the source point, the second source point, bounces off the straight line and come all the way down to the downward channel, right? To the downward red line. Let me zoom out so you guys can see it clearly. Can you see? Price came back to test this red line, right? This is not just me just drawing out lines. This is pure price action happening right in front of us. Can you see? So price already tested this red line on Thursday. Now we want to trade on Friday. How do we expect to trade? Now this is where we now dive deep into the 5 minute time frame. This is all we want to do on the 1 hour time frame. On the daily time frame, like I said, we want to mark out the high and the low the previous day with a vertical line and the next day with another vertical line so you can demarcate it carefully. Now, how do you execute your trade? Right? You go down to your 5 minute time frame. Right? I'm still going to do more and more and more videos about candle rate theory so we can all understand the concept very, very well. So you can see all of this channel here is the Thursday range. This is all the price action on Thursday, right? We don't want to know, we don't care about the price action on Thursday, right? What we just care about is the high and the low. And mind you, we have the trend channel guiding us as well. So now moving on to Thursday, as you can see right here, price opened, right? This was price opening. Can you see this is 11 p.m., which is exactly the opening time for Friday, right? This is Thursday. Can you see this is the opening time of Friday? Can you see price market open as that ranging? But look at what happened when price got to the low of Thursday. Can you see this is the low of Thursday right here? And when price got to the low of Thursday, can you see price rejected, giving us an FPG? And you know about Go Digits, guys. We always wait for conference. And what is our major conference? We want to see institutional traders trading alongside with us. We don't enter our trade if we do not see the footprint of market makers, right? We do not enter our trade if we do not see this fair value gap, and which is this fair value gap right here. Can you see? Can you see this clean, beautiful fair value gap right here at our entry zone? This is our entry zone because this is the demand zone. Price rejected off that zone and gave us this FH. This is a clear signal for us to take a buy. Can you see? So let me mark out that fair value gap right here. So this is our FVG. Let's have the notes in it so we can all get the view. So FVG, which is our fair value gap. So we have our FVG right here. So what are we going to do? We want to target the next high as our take profit, right? How do you manage your risk trading this strategy, right? You can take your trade right immediately after the close or after the formation of the FEG, or you wait for price to pull back into that zone, then you take your entries as well. But for this strategy, you can take your entries right immediately after the formation of the fair value gap, right? Immediately you see the fair value gap being formed, you can take your trade immediately. For you to preserve your risk, you can wait for price to pull back into that FEG and you are going to execute your trade. So if you're to execute this trade right here, you want to go long at the close of that FEG formation, which is this, right? This is where you want to take your entry, and your stop loss will be right below the FEG, right? Want right below the FEG. You can target 1 to 1.5 risk to reward ratio, which is usually ideal. But if you want to still go further, you can target one. To, yeah. Let me quickly explain this, guys. These are the ways you can take profit in this particular strategy, right? The first take profit is your 1 to 1.5 risk to reward ratio, which is going to be this, right? This is your first uh, take profit, and you want to take the second take profit. You can target 1 to 2 risk to reward ratio, which is this as well. But majorly, for you to exhaust the entire trend, you target the next resistance level according to the strategy, which is this. Now, this strategy helps you to maximize your trade, right? It helps you to maximize your trade for you to scalp and to take opportunity of the market throughout that day, right? You can see most traders will believe that this is unrealistic. It is impossible for the market to get all the way to the top. Now let's check how many pips is that. Starting from this point right here, how many pips? These 54 pips, right? About 54 pips right here. So this looks like an impossible situation, but let us see how price played out. Can you see? Full take profit hit. Like I always tell my students, guys, always break even to secure your profit, right? This strategy doesn't fail, right? It doesn't fucking fail. So let's go, let's play price forward so you can see how it keeps on playing out. We've already taken full take profit right here. But if you're still looking out for more opportunities in the market, you want to take more trades, look at the same setup happening right here. Remember, I always tell you guys, wait for an FEG. Don't just jump into the trade. There are two conferences you can look out for. You can look out for a bearish engulfing or bullish engulfing after the rejection of that zone. Right? You can always look for your engulfing candlestick. But for me, I prefer entering at the FEG level, right? The first fair value gap happening after the rejection. So as you can see, guys, this is another FEG right here. This is another beautiful FEG. We have, we'll note it this way. We have FEG formed right here, right? So you want to take your entry at this point. Can see price didn't move as fast as it moved the other time, but that's all right. Our stop loss just a little bit above it. 1 to 1.5 weeks to reward ratio. This is 1 to 1.5. You can see price didn't actually hit our target, but you can see price is still moving towards that area, right? Still dipping down that area. So this is candle theory. Let's look at for other peers. Let's speak another asset. So this is GBP, JPY. Let's take out all the drawings. It's going back. Now pay attention, guys. If you missed out the explanation on the first asset, now don't miss this out. It's very, very important. Now look at the previous candle. Now I'm going to explain the concept of liquidity in this particular um, example. So let's proceed the same step. Remember, go to your daily time frame. The previous trading candle, the previous day trading candle, you want to mark the high and the low, which is this right here. You have to ensure that it is at the exact tick. You don't want to make mistakes, guys. You don't want to make mistakes. Every pips count, right? Every tick counts in this market, right? You want to place it exactly at the high and low, right, without making any mistake. Can you see this is not perfect enough? You can zoom out, extend your chart just to ensure that you have the right precision, right? That this is good right here. So we can have a vertical line, this ensuring that we are the right candle, and this is the new candle. So pay attention, guys. I'm going to explain something real quick using this example. So scaling down to our 1 hour time frame. Like I said, what are we looking for in our time 1 hour time frame? One look at the trend of the market. The trend of the market. Can you see price was actually ranging? So you see price has been ranging. Beautiful. So this is what we are looking at for in our 1 hour time frame. You can turn this as well to a channel. Clone this. Just find a way to have, yeah, this is good enough. So we have our channel, we have our zone, we have our channel. So scaled out to 5 minute time frame. What do we have? So scaling down to 5 minute time frame, you can see this is the entire trading volume of Thursday. Right? This is all what Thursday had to do. Right in this box right here. This is all what Thursday had to do. Now playing price forward, can you see on on Friday price opened and was ranging, right, and was ranging right here. So Let's zoom out. Can you see we got a rejection at that zone? We got a very good rejection at that zone. And if you just want to fine tune this, let me teach you guys. Okay, we have, can you see at this top rejection, at this bottom as well, massive rejection. So let's fine tune this. Good, beautiful. This is accurately beautiful. So let's play price forward. Price kept on ranging. Now look at the trend line. Price actually respected this trend line even during our trading period, right? Price respected this trend line, but that's not what we are doing right here. Look at this, got rejection and got a clean FEG right here. Yeah, so like I said, won't take your entry immediately at the close of that candle, or you want to wait for price to retest that same FEG before you take your trade. Can you see price dip down quickly and retrace back? But can you see here price rejected as well? Price rejected at that zone, and you see it's still rejecting and is ranging right now. But you can see the entire um idea. Once you have a rejection at your support level, this low line has become your support level, while this high has become your resistance for the day. So most of the time you see price respecting this entire range, right? This is a liquidity sweep right here, like I was trying to explain. This happened to be a liquidity sweep. As you can see, this is price gave us a gap, a little bit kind of gap right here, and pull down. Look at that rejection. Even after we got put up right here, you can see price took our liquidity info line. Price took out the high of this. So price took out the liquidity that is resting at the high right here. After taking out that liquidity, can you see how price dipped down into the range? So that's what they call candle range theory. We're going to be trading throughout the body of the previous candle range. Now, this is for the daily candle range theory. Now, let's go down to the 4 hours candle range theory. Most people don't have the time to wait for price to come all the way to the top or all the way to the bottom. It's going to take almost all of their time. Now, let's see here. Price started playing out around 10 a.m. and look at the final another touch here around 3 p.m. So we will not have the levity of time to look at all of this. But now let's go to a fine tune strategy using the 4 hours candle. Now the beauty of this is you can use any higher time frame buyers for your candle rate theory. Now, but you have to use it carefully and wisely, right? Don't just pick any random candle in your higher time frame, right? Don't just pick any random candle. Now, I want to pick this. We're on the 4 hours time frame. I want to pick the first 4 hours of the candle open, right? The first 4 hours of the candle open, which is this blue candle right here. So this is what we want to do. The first 4 hours candle happens to be the Asian period, the Asian range period. So what we're looking for is for price to take out the high or the low of the Asian range, right? This is the 4 hours concept that will mark the high, and we're going to mark the low as well. Make sure you mark it with precision, no room for errors, right? Look at this. We mark the high and the low of the Asian range. You use the vertical line to spot it out, and you use the next line to spot your next hour time frame. Now that we are using the 4 hours, right? You now want to use your 30-minute candle. Remember, if you're using the daily time frame, you use your 1 hour time frame for the direction of the trend, and you enter your trade on the 5 minute time frame. But this time around that we are using the 4 hour candle, right? You use 30 minutes to look at the trend of the market and enter your trade on the 5 minute time frame as well. Mind you, we are using only the first 4 hour of market open, right? the first 4 hour of market open. This is what we are doing, right? So you can pick any first 4 hours of market open, but for me, I prefer using the first 4 hours from the market open. That is 11 a.m. to 3 p.m. Right? No, this is wrong. This is supposed to be Thursday. Supposed to be 11 p.m. Let's go back to the 4 hours time frame and pick the right candle. So this is Thursday, 11 a.m. Should be, yeah, this is the right candle right here. Let's take all of that out. This is the right candle. Yeah, I've spot that. You mark the high, right, and you mark the low. That's not well placed. Make it. Make sure you fine tune. Make sure you fine tune it so you can get the best entry. So you can just pick any 4 hours time frame. Now let me give you this simple logic. Right, I'm going to show you guys how it actually works by the end of this video. Now you want to go to your 30-minute time frame to look at the trend of the market before you jump in. So and you see we've been having uh bullish trend, right? You can see price was bullish for some point for some time, right? Look at this, right? So let's proceed. Like I said, you want to turn this to a channel to as wide as possible. This is just to guide your trade, right? It's just to guide your trade. We have a very beautiful channel that has been formed, right? So playing price forward, you go down to a 5 minute time frame. Playing price forward, you can see. Let's zoom out. I told you guys. Now price broke through with an FEG, but immediately returned back and mitigate that FEG, making this sell setup invalid. Right? What are we going to look out for? A buy opportunity. This sell setup is invalid. We're looking forward to a buy opportunity, which is right here. This is an FEG that is formed right here. And if you don't want to take it, this is another FEG that formed cleanly right here. Can you see two entry condition given us, right? These are two entry conditions, and this is how you exactly want to enter your position. If you're entering right here, look at the retest of that, the stop loss just below that, and you'll take profit all the way to the next resistance zone. Same thing applies to the other entry. Uh, Let me close this. This is the second entry right here, where we will target as take profit all the way to the next resistance zone. Right, your stop loss just below the FEG, right, just below the FEG, and you can see right here you got a full take profit. So this is just everything about candle rate theory, but you have to know how to use your higher time frame clearly, right? If you're using the daily time frame, you want to look at the trend of the market from um, your higher time frame, right? From the 1 hour time frame, you start up from daily time frame, you go down to your 1 hour time frame, you execute on 5 minutes, right? But if you're using the 4 hour candle, after you mark the high and low of that 4 hour candle, you fine tune your trend direction or the 30-minute time frame, and you execute on the 5 minute time frame. So that is how it works, guys. Not Don't overcomplicate it. Don't forget to also use your trend line as your guide, right? Use your trend line as your guide. But look at this. This was a false breakout, right? It's a false breakout. But thank God we have this buyers right here and gave us a full take profit. Now look at this. After price broke out massively on this trend, broke out with an FVG. Look at this. I would have called out this signal if I was using this strategy to give out signal as at that period of time. You can see right here, this was an FEG. Price retested that FEG. Your stop loss just below that zone. And look at this beautiful, beautiful entry, giving us about, look at this risk to reward ratio. This is so massive, right? So massive, guys. Look at this opportunity forming up above this our zone here. This is the FEG. You can see price went into ranging market, which we don't want to take part of. So, but look at this beautiful entry. We got one, two, three entries using the same concept, right? Using the same concept, guys. So, this is the strategy. So, you can as well fine tune this, right? Can take your take profit all the way here to the next trend line. That's the essence, right? That's the essence. So, you can maximize your trade and you always break even as you proceed, guys. You always break even. So this is all about candle rate theory, but more videos are still going to come up. This is just the first introduction of the basic aspect of candle rate theory. In our next video, I'm going to still show you more in-depth breakdown on how you can maximize your profit and minimize your loss. So that'll be the end of this video. I'll see you guys in the next video.